The accounting equation really sets up this homework problem because we're doing a lot of algebra to fill out the financial statements here. And so this is a preview of also what we're going to learn today. So missing amounts from the financial statements, they're owned in basically we have four financial statements and we have some missing amounts, and we can use, you know, rules of just logical rules of how the balance sheet and income statement and everything works to figure out what we're going to do here. So in this statement here, fees earned is revenue, and then these are all the expenses, and then we have total expenses and then net income. And we know that revenue minus expenses is equal to net income. And so we bring out the calculator here. We can know that if we take fees earned of 200, or if we take our net income of 264, and we add our expenses of 486, we can arrive at what our revenue amount was, which is fees earned as revenue for a service business. They're charging fees. So that's going to be a revenue item. That's 750,000. And then supplies expense, well, we know our total expenses, we know the rest of the expenses. So if we take our total expenses of 486, we back out, oh shoot. So we take 486 minus 310 minus 103 minus 23 minus 22, we get 28,000. That's going to be our supplies expense here. So that's how we can kind of know this algebraically. And don't worry, we're just going over this before class, so just sit down. And then investment by the owner and net income for April, and then ending capital on April 30th. We have to figure this out. This is a statement of equity. This shows the beginning equity and everything that happened in the statement of equity throughout the year, which is investment by owner, net income, withdrawals, and then ending equity. Well, we can find out our ending equity because it's probably on the balance sheet. It looks like it's not on the balance sheet, but we do know that we have in the statement of cash flows here, there's clues everywhere to this to fill out this problem. We have cash received from owner's investment of $380,000. So we can put that as our investment by the owner. Our net income, we know from our income statement up here, was 264,000. And then we can get our ending capital balance by taking 0, the beginning capital balance, plus additional investment by the owner, 380 plus 264 of net income, because net income increases the owner's equity in the business, minus withdrawals of 125, we get 519 as the ending capital. And if this isn't making sense right now, our lecture today is going to go over all the steps and all the underlying information for this. I just want you guys to have, yeah.
So for the 380,000?
Yeah.
375.
Oh, thank you so much. Yes, and if I'm miskeying a number, please let me know. That's very helpful. Okay. And we can say let's see if the check my work works on this. We can check our items here. So, this is algorithmic. So if you're doing it on your own, it's going to be different numbers. So you're good, yeah. So if you're doing it on your own, you're going to get different numbers here, just because of the way it's working. But that's a good call out. So for total assets, we just have to add up all the assets on the balance sheet. That's our list of assets. 462,000 plus 11 plus 151, that's 624,000. And our capital balance, well, we know our ending capital balance because we calculated it right here on our statement of equity. And so we can take that right to the balance sheet. And then our total liabilities and owner's equity is going to equal 624, or it's going to equal 624 because assets, the accounting equation is assets equal liabilities plus owner's equity. But if we take here 105 is our liabilities, which is the accounts payable, plus our owner's capital of 519, which is our equity, we get 624, and that ties, which is really good because that's a way to verify everything is correct here. The accounting statements are all the financial statements, they're all interrelated. And so there's a lot of ways to check your work even without the check your work feature, because you can see here the total assets ties to total liabilities and owner's equity, which includes the capital balance, which ties to the capital balance we calculated here with the investment by the owner from the statement of cash flows and the net income from the income statement. So there's many ways to arrive at the same answer here. Uh, so statement of cash flows is going to be a little bit trickier, and it's important to um, start with what we know. So we know that there were withdrawals of 125,000, so we can input that right away here. Oops. And then it also says use the minus sign to indicate cash outflows, cash payments, and decreases in cash in the statement of cash flows. It's super important to read the directions for plus and minus signs on things because they can be different from problem to problem, but they are all said in the problem what you need to do. So one thing to note there. And then cash received from customers. Oh, we don't know that yet. Net cash flows from financing activities. Well, we had 380,000 deposited by the owner, and then the owner withdrew 125,000. So that's 255,000. And then we also know our cash balance on April 30th, which is at the end of the month here. Cash balance April 30th, we can find that on our balance sheet, and that's 462. So we know our net increase in cash was 462,000. And then we have a bunch of different places on the statement of cash flow. There's three different types of cash flows that we classify. So there's operating, investing, and financing. And every cash transaction is going to fit into one of these boxes. And so we know that if we add up this box, this for cash paid for cash from operating activities, cash for financing, cash for investing activities, and cash for financing activities, it's going to add up to $462,000 because that's what we know the net change in cash was. We know our cash paid for land was 151,000. And that's an outflow. So that's going to be a minus sign here. Let's just check our work. Make sure we're on the right track. Yep. Okay. So we know that the net change in cash was $462,000, and 255 of that was from financing. So we'll take that out, and then we'll add back the 151 that was used to purchase the land, and we get 358,000. That's the remaining cash flow. That's what we have to put here, 358,000 to make 358 minus 151 plus 255 is equal to 462. And we know that that's what we need to get to because we started with zero cash. We ended with 462,000. So we know that to get there, that's what we need to have. And then we can arrive at our cash received from customers by taking 358,000 and we can add back the negative 392 because $750,000 is 750 minus 392 is 358. And that ties to our fees earned for the year, which means that all of the bills that we sent to customers, we collected on that. All the services done were for cash. It could be a little bit different in another problem if there was what's called accounts receivable. That's bills from customers that haven't yet been paid. So, um, does anybody have any questions on how I went through this? Okay. I know it's a lot. This is a quick problem that I had 5 minutes before class, and I'm glad we were able to get through it. So thank you.